I'm back, and I apologize for the delay. I've been in Texas, obviously had some power issues, but we got power back, we got the snow, and we'll get to energy in a little bit because that's a pretty relevant topic in today's market. But first, let's take a look at the overall, more broad trend. We've had a very strong rally. We obviously had some sort of sell-off after the GameStop issue that occurred. And then we quickly rallied to new all-time highs right after that in a very vigorous fashion with little halting. But then we did start to see some sort of sputtering around the S&P 500, 3,900 level. And today, with the hearing, yesterday, with possible fears, we saw the market start to slow down. And I think it's a little bit more than just the hearing, right? We had some disappointing jobs numbers today. We had Walmart urge and claim that we need more stimulus. The disappointing jobs numbers is certainly not good, but the better than expected retail sales number that came out yesterday is somewhat reassuring. I just listened to Janet Yellen, the new head of the Treasury, who's former head of the Fed, which is an interesting combination. Typically doesn't happen except in countries like China. Sound very optimistic and reassuring on possible new stimulus, and reiterated the notion, which I have believed for a very long time and continue to believe, and that's that market is just going to continue to, well, not necessarily the market's going to continue to go up, but that the Fed is going to remain easy and provide liquidity and keep interest rates low because they have the tools if inflation gets out of hand to suppress inflation. I think some inflation is going to occur, and she almost subliminally hinted at that some printing of money, of course, is going to happen to occur with Sarah Eisen today. She didn't say that. It's more about what she didn't say, and if you listen to it, you will maybe find the instance that I'm talking about. She was talking about taxes and left out something, and it's probably printing money. There's two ways the government gets money. Anyways, Thomas Peterffy, the chairman of Interactive Brokers, who is my fund broker of choice, made a very clear and concise point, which I have been reiterating for some time and believe at the bottom of my heart, and that's if there is printing of money, the markets must go up, at least in nominal terms. Obviously in real terms, who knows? It's a very complicated equation and valuation thing to figure out. That's why I suggest investing in good technologies you like with potential ahead of them, or significant cash flow growth that could possibly exceed that inflation. And I would look to underpriced commodities like energy, which I have been in for some time and have been advocating for. It's been one of my 2021 trades. We had a particular week, and these videos are not available because Instagram has been taken down, but at some point in the future, I will look. I have all the videos saved, don't have the captions. I'll just kind of hire somebody, post them all on YouTube and LinkedIn, etc. And there will be videos before the last week of 2020, where I highlighted 3 sectors that I believed would do very well or be the sectors to get involved with and dabble in 2021. Those were energy, real estate, and gold. Gold has not performed well, it's gone down. Hopefully that'll reverse. Real estate has done well. I still advocate for that sector. It's highly correlated with inflation and reopening and low interest rates, which look like they're going to stay, at least in real terms, relatively low for some time. And then energy, which has seen a big run. And energy stocks maybe are going to continue, but this is a very important area of the market, so it deserves a little bit more discussion than that. WTI crude prices have increased more and faster than many of the energy stocks. So on that calculation alone, if you find an energy company which has reiterated its commitment to the dividend, of which Chevron and Exxon both have, and studies have shown that they are capable of paying that dividend, that seems like a pretty good value stock. But there has been a headwind in the last week, past 2 days, that I've been unable to record videos, that has led me to take some off the table off these positions. These were some of my largest positions. In the top 3, across all accounts, ExxonMobil, in particular, was a energy position I had, but maybe you have a different favorite one. And the reason, the headline that has giving me some reason to trim and lock in some gains here is that Saudi Arabia, the Saudis, plan on hiking their oil production. Now, you may remember just recently they gave this gift to the world of cutting their energy production, and now this has changed. They're no longer doing that, or they are just talking about having more production. So increase to the supply. Maybe it has something to do with Texas. I don't know. Interesting situation, but maybe these guys think it's pretty ripe to attack the U.S. oil industry. I see some tension brewing between Joe Biden and the Saudi Arabian prince. It's unfortunate. He got along so well with Trump. Energy prices were low, which is a good thing for American people. Yes, maybe not so good for the companies, but it's good for the people. Putin might do the same. He is very fond of destroying the U.S. oil and gas industry and promoting his own. So if there's a way for him to get more cash flow and hurt his competitors, it's possible that's going to happen too. So I see a possible downfall domino effect occurring in energy prices, unfortunately, because they are at a very good level right now. Not the best they've ever been, but sustainable profits for the companies that sell energy. So we'll see what happens. I can't guarantee, energy prices are going to fall, but I'm starting to see that the Goldilocks path is becoming a little less Goldilocks-like, and we'll see what happens. I'm just taking some risk off, not afraid to add it back, but it's seen massive gains. Happy to lock those in, and we'll see what happens. So until next time, peace out.